Welcome everyone to another episode of the Future of BizTech. I am your host, JC Granger, and I have another fantastic guest on the show today. And listen, if you end up loving this episode, please show your love and appreciation by following the podcast wherever you're listening and give it a 5-star review with some comments, because that is how other techies like you and I find cool podcasts like this. And today I have the absolute pleasure of interviewing Alice Ferguson, the COO of Healthcare Finance Direct. Alice, thank you so much for being on the show. Tell the audience a little bit about yourself and what is it you guys do?
Well, so JC, thank you so much for having me on the show. I do want to give a call out to your entire audience, including your girlfriend, Ida. And
that's actually my mom. My mom would be like, wait, that's not it.
Yeah, your audience of your mom, your girlfriend, and your two friends. So
yeah, my two whole friends. That's all I have right now. I'm working on getting that down to one. It's just easier.
Well, my name is Alice Ferguson. I am the CEO of Healthcare Finance Direct, which is HFD for short, because we know that the whole name is a bit of a mouthful. And we do patient financing, which is not the sexiest two words in the business world right now, but I'm hoping to show you today why it's incredibly important and why the way that HFD is poised is going to be the wave of the future for this industry.
Yes, so, you say it's not sexy, but I got to tell you, healthcare is a pretty big problem for a lot of people. And I would say that anything that saves people money or puts them in a position where they can take advantage of their actual plan. I mean, I find that sexy. I don't know, maybe I'm just a nerd. I'm a nerd like that.
And I love that you think about that way, because, every person out there is a patient, and every person out there needs to figure out how to finance their procedures, because as we know, we're not a country with universal healthcare, may not ever get there. And the interesting thing is that we see much more elective healthcare now, because people care about how they look, people care about what they want to do, so it's what they need to do. So then the nice thing is that we're growing organically in those directions, but also we have this 100% approval financing platform, which I don't know if you know, but like the entire US industry, if you look at the entire population, only about 50% of the population actually have what's considered like a prime credit score. That's a score of 680 above. That's only 50% of the population. You have the other 50% that gets declined time over time for getting financing. So the idea that we have a 100% approval platform, and the idea that we are doing something that is just naturally organically growing as time goes by, and that's why it's kind of exciting and sexy to me, and it sounds like to you too, and your 4 people in the audience.
I mean, here's why I say that, because there's a stat that I heard, and you're in the industry, so correct me if I'm wrong, but I heard this stat not too long ago that was alarming. And it was essentially that, for one, we already know that we have very expensive healthcare, for one. And we know that we don't get a lot for what we pay for compared to some other countries, right? Now, we already know that. Here was the part that I found even scarier, was that of the people who are insured and have plans, most of them will avoid going to the doctor to even use those plans, because it's almost too expensive to even engage in the plan. Like the premium becomes, like, the copay can be so high when it comes to surgery or whatever, or they are capped at a certain amount that it is now going to exceed, and they know this going in. So what I found to be tragic was that it's already expensive and coming out of their check, every month. And then when it's time to actually use it and cash in on it, it's literally too expensive to use, even when you're paying for it already. And that was crazy to me. Am I wrong on this? Because I remember.
No. And I'm not, in the insurance industry, but I've been a user of insurance in every way possible, right? There's things like co-insurance, which means that, they only cover 20% of something. There's maximums, there's deductibles, but even for things like your home insurance, like, that's a pain to go through too, because there's a deductible, there's a maximums, there's caps. You literally have to read the 30-page contract that you get in the mail twice a year, and save that, find that, and read through that, to understand what is even covered. So it's just, you're right. It's not just the dollar amount that you have to worry about, but it's the whole process, right? That in itself is challenging and daunting, and no one sits around being like, oh, great, I have time today, let me read my insurance policy. No one's sitting around doing that. So I think the whole thing is just how do we make it easy for everyone to think through, and how do we make it comprehensive? So that's, I think you're absolutely right. There's, even with insurance, there's still a question mark as to, am I going to get this covered or not?
Sure.
So
Well,
that's
let's
kind of
talk.
where we come in.
I do know that there's like a B2C aspect where you do, but I want to talk about the B2B aspect specifically, right? So talk to us about how your company works with other bigger companies when it comes to this.
Yeah. So to kind of taking a step back, if we think about healthcare, so much of healthcare that's covered by insurance is reactive. You break a leg, you go in, you get it covered. But really the whole world is becoming more health conscious these days. So people are getting into more proactive stuff. I want to fix my teeth alignment before I need a cap, a crown. I want to, get this removed before I get cancer there. And that proactive part usually is not covered by insurance. And that's what they call elective healthcare, because nothing's bad happened to you yet. We're not going to cover it.
Yeah.
So there's
If
this,
it's not broke, don't fix it, right? We're not
exactly.
going to pay to fix it.
No, I want to fix it because I know it is going to break in the future.
Mhm.
So that's the nice part about this whole elective healthcare piece. Now, with the way that we do we cover and we think about it is most of these providers, most of these healthcare providers, they're good at one thing. You want them to be good at one thing, which is to take care of you, to do the surgery, do the procedure, do the best they can, and get you healthy. And they're not good about thinking about financing, following up with financing, processing your payment, making sure the administrative stuff behind that all works. That's not what they're good at. And that's not what you want them to be good at either. And so that's where we come in. We say, great, doctors, you think about the healthcare piece, getting that patient, getting JC the surgery he needs to be the best man he can possibly be. Let us worry about how he can pay for it. And let us worry about following up with him, making sure that he is compliant with how he pays for it and all those administrative stuff. So really we think about selling to the providers because we know that the providers don't want to think about anything else but the payment part.
Well, that's a huge infrastructure cost for them as well. I mean, it's not even just a mental bandwidth thing. I mean, that's a lot of money on the books for them to have people who do what you're talking about, essentially, what you're providing for them, for the software side wise.
Software side, people, like in terms of reconciliations, because it's dollar amount, they always have to reconcile to ledgers and stuff like that. So, so we want doctors to outsource, and they do outsource it. And it's not just doctors, right? If you think about the entire industry as a whole, like every great company out there, even big companies like Apple, where I used to work, what are they known for? They're known for making great products like hardware, phones, laptops, and stuff like that. They're not known for software because look at the disasters of Apple Maps and Siri and stuff. So even great companies, with the exception of maybe Amazon, are good at one thing, and these doctors are good at one thing. Everything else is they're really better off outsourcing it and giving it to someone else that can make it easy for them to integrate with and make it easy for the patients to use. So that's kind of what we're feeling, because we really want these doctors to have an easy time treating their patients and not spend their time thinking about anything else.
So then let's talk about that. So you can work with big companies, but you can also work with like a direct doctor's office, like just an independent doctor. So I mean, that's a lot. That's a lot of, I mean, that's a majority, right? Like
Yep.
these private practices make up the majority of the system for the most part, right? So when you are talking to, like, what is your kind of 30-second pitch to a doctor's office? Because I find personally that, they get pitched a lot for a lot of things. And
Mhm.
doctors are not always the best business people because that's not what they got. They didn't get into their education for business. They got their education to help, right? To literally physically help people. But when they start a private practice, they kind of get launched into that side and it's really chaotic for them. A lot of them struggle with a lot of things that it takes to create and run a business successfully. So when you are approaching a private practice, what is like the main thing that you say, hey, this is how we're gonna make your life better. All right, and then what is that, not that you have to go into any kind of pricing, because we don't want that can change, but just maybe what the model is of how you're compensated.
Yeah. So what we call our model is called the win-win-win model. So it's 3 wins instead of 2. And the first one's for the doctors. They don't have to think about in-house financing. They don't have to think about using different financing tools. It's a win for them because we make it easy for them to have a financing vehicle. The second one's for consumers. Consumers, we take care of on our side, and we're experts in that consumer experience because that's what we think about. We think about how to reach the consumer, how do we get them to pay their monthly bills, and we approve 100% of consumers so that they don't have to worry about it, and they don't have to worry about us writing to their credit reports. The third win is for our lenders. So if a doctor say, hey, I don't want this on my balance sheet because it's too much for me to carry, we actually match that doctor or that office to a lender. And we make sure the lenders are able to get a profitable pricing arrangement, so it's sustainable. And it's all about sustainability because the doctors just want to set it and forget it. They say, we have this financing, we're not going to change it for the next 20 years because I don't want to think about it. So it's a set it and forget it model where it's a win-win-win for everyone in this ecosystem.
So does this mean that it takes away the problem of them having to bill insurance companies and all the crazy delays and negotiations that go on with that, or does it not? Like, is that still going to be part of it, or what?
So we're separate from insurance, right? So a customer can still say, hey, I want to use insurance for this. And a lot of treatments are covered by insurance. So they still have that part of the world. But if a person would say, hey, I want to pay out of pocket, but I can't actually afford it, or I want to pay out of pocket and I want to use this part for insurance, that part will still be by insurance. And there's billing companies and there's insurance claim companies that can do all that. We're essentially for the people that want to do cash pay, but can't afford to, or want to do cash pay and they can't do it in one lump sum.
So then you guys can also work with like plastic surgeons, like you said, elective, or is it only just, like where's that elective stop or not, or does it not?
Well, so I say elective because that's where we tend to gravitate to, but really our solution can work for almost anything. It can work for buying Peloton. It can work for anything where you have a large chunk of a payment that you want to spread out over time. And the big difference, and I should maybe take a step back and explain the business model, is we are essentially giving a financial arrangement between the doctor's office and the patient. So the big difference is that we're not a bank and we're not a lender ourselves. So if you go into your doctor's office and say, hey, I want to pay for this crown, but I don't want to, it's not going to be covered by insurance. I want to pay for it out of pocket, but I want to have like some sort of an arrangement. Instead of the doctor saying, be like, great, go apply for a credit card and you get a credit card and that's your relationship with the bank. Yeah. We would say your relationship and your contract is with your doctor, but the doctor uses us for a servicer, a first party service is what we're called. So we're in there, but you're not dealing with a bank at the end of the day. Like if you go to Home Depot today and you want to get a loan, there's a Home Depot home loan, but it's actually Citibank. So you're ultimately dealing with a bank. And because banks have all these regulations and compliance, their underwriting only approves at 50%. Because we use something called a retail installment contract model, we're saying your relationship is actually with the doctor. Your contract is with the doctor. All we're doing is helping the doctor service it, onboard it, doing technology, doing everything else, but the doctor's name is still on that contract with you. So if you have any issues, if you want to return the liners you got because they just don't work, you don't have to deal with the financing company to figure out how do I stop my payments. You can go straight to the doctor and say like, hey, I want to return these. It's not working for me. And the doctor's like, great, I understand what you're saying, JC. Let me just cancel this for you. It just makes it much easier for the patient.
You're the provider on the back end. They can still deal with their doctor's office essentially, right?
Exactly.
Do you find, do you work with bigger ones like hospitals, or do you find that they already have their systems in place? So you do the local or the smaller mom and pop, so to speak, practices. What about the bigger companies?
So we can do the hospitals, and we do work with big companies that have, for example, 800 offices, or ones are a complete e-commerce. That you go online, you pay through us, and then you get your stuff in the mail. So we do work with pretty big companies. Hospitals are a little bit different in that they have a pretty rigorous insurance billing process. And then a lot of hospitals, what they do is they actually kick it to a collections agency. So if someone's not paying their bill on time, they kick it to a collection agency, which can have different terms. And we're not a collection agency either, because that is regularly a little bit different.
Got it. So how does your financial model work? Like, how do you guys make money just in general?
Yep. So we essentially take a percentage of the payments that we are getting for the provider. So provider says, so we say like, hey, you have 100 customers that come into your doors, in a month, but 20, 30% of the time, you can't actually treat them because they can't pay for their services.
Mhm.
So we will get you that 20 to 30%. And then for that 20 to 30%, they'll be put on like a monthly payment cycle. And when we get that payment for you, because it's not always, there's always people that can't pay on time or stuff like that. When you get that payment, we get a small percentage of that.
So it's like a finder's fee on each payment a little bit, right?
Yeah,
Because money they never would have been able to get themselves, you get that, and then you can take a small finder's fee, like, hey, for the work we put in here, we're gonna take a little bit.
We have a great call center that kind of services those folks. They call in, we have chat, we have SMS with them, we send emails, we send mailers, we send SMS texts, stuff that patients and the stuff that doctors can't do or want to do.
Yeah.
So we have all the servicing tools to make it friendly and make it easy for patients to pay, and we deal with all that. All the doctor's office do is connect us to their payment system, to the bank, and say, all right, we're just getting the money roll into us on these things. I mean, they get reporting on like how many loans, how many contracts they originated. They get reporting on who's late, who's not late. So they get all this reporting. That's easy to see if they want to see it. But really, all we were doing is saying, great, you're in the office. Here's a little screen, sign up here, and then you get money, flowing to you as soon as customers sign up.
So does that mean that the end user, the patient, does that mean that it's like an interest free, or can the doctor attach interest on top of it? How does that work?
Yeah, and that's completely up to the doctor. So this is us being the first party servicer. The doctor tells us, hey, we want everyone that walks in to get the same pricing, the same interest, the same down payment. That could be an option. We want everyone to get a 0% interest loan. That could be a 0% interest contract. That can be an option too. So it's all different things that the doctor wants to provide. And if they want, we just segment the customer base by certain demographics. We can do that too. So it's actually up to the doctor and what their preferences are. But we can definitely take a look at. It's completely customizable, and that's why we call it a platform, because that means that there's flexibility and there's customization for the doctor's office.
That's really cool. So, well, first, how long has the company been around? How long have you guys been around?
Over 10 years. So it actually started out as a mom and pop, looking at those mom and pop offices with 10 offices, 5 offices, they don't have the infrastructure in place. They use us. And then over the last few years, really scaled up. So now we have clients that have over 800 offices. Wow. We have clients that originate thousands of contracts in a given month. So we really scaled up, and now we're starting to think about, to what you were saying earlier, how do we grow? What are the next evolutions of patient financing? And it's kind of an exciting time to be here.
Well, let's skip to that then. Let's jump right into that question. So where do you see the industry you're in? Where do you see that going in the next 5 to 10 years? Because you're not alone in the industry, but you guys have a really cool value prop, which I think is great. Where do you see that going next 5 to 10 years, whether it be from technology or legislation or culture or just anything? Where do you see the industry going?
Yeah, there's actually some exciting things going on right now in the industry. Have you heard of buy now, pay later, the BNPL space? Yeah. So that's
getting really, really popular, and it's like popping up on everything, like eBay, Amazon had their own version of it. I mean, it's just almost anything you want to pay for, you can get it right now, and then but pay for it later or over time. Yeah, I see it everywhere now.
Yeah, so that's really been huge in the last 5 years, and then Affirm kind of started that whole trend. So, but because it's been so popular, there's been much more regulation on it. And buy now, pay later. And the nice thing is that, people understand the whole concept of like getting something now and paying later. It's a little bit different than layaway, which was the trend 10 years ago, 20 years ago, where you
pay now, get later.
Yeah, exactly. Pay now, get later, pay over time and get later. So we are, there's been more focus on that, which is something that we are not. Buy now, pay later is 4 payments, 2 weeks apart. So that's a very defined loan type. And those companies are all backed by banks too. So they don't approve everyone. They pull your credit report. They write to your credit report as well. Something that we do is called pay over time. And we hope that, and we see that possibly growing because of there's going to be a shift away from buy now, pay later is our guess. But also for a lot of healthcare, it's not buying, $200 shoes. It's buying $8,000 of fertility treatments. you don't want to pay those over 8 weeks. You don't pay
Yeah,
them over
that's hefty.
5 years.
Yeah. And what is the max time that typically you guys allow at this point anyway for overtime?
So our longest right now is about 5 years. So
Okay.
for loans that are like $10,000, $20,000, for contracts that are $10,000, $20,000, we use a 5-year horizon. For ones that are about $2,000, we use like a 2-year horizon. So very, very different than the buy now, pay later 8-week horizon. So we see that shift away from buy now, pay later, especially as people go up on the spectrum of dollar amounts, but also because buy now, pay later has much more regulation on it going forward. And part of it's because they're just not performing well. Like it's still, Max Levchin from Affirm started to get away from credit cards, but you use credit cards to pay for these. So it's kind of not really fulfilling the original purpose.
But I think a lot of people too are afraid of a credit hit, or they're afraid of it not giving them enough time or a higher percentage. And that's just the fear that's been instilled through experience, as consumers, right? So I think what they did good is I think they started an idea, but I think that it's going to take some time to convince people that it's not predatory.
Exactly.
Right. And I think that's the biggest issue, is that just most people think, what's the catch? Like, where am I getting played here, kind of thing, right? Like, am I going to be stuck in this high interest thing? Is it going to balloon later and I didn't read the fine print? Like, we're just the terror has been instilled, and for good reason. I mean, like, we 08, 09, we've been through it, more than once or twice, right? So okay, so let's talk about your company specifically. What's coming down the pipeline for you guys here? What kind of cool inside track roadmap stuff can you tell me about that my audience can hear first?
It's funny that you always want the inside track, but yes,
I'm greedy like that. I'm very greedy. I'm an only child, basically.
I love
until I
it.
was like 12. I was raised mostly an only child, and I want it now.
Well, the one thing I can tell you, which I think is very exciting, is through all our work over the last 10 years with providers, we know that doctors really rely on their front office staff. That person that's sitting in front, that greets the patients, that have to do the checkout, the payment, and stuff like that. That front office staff, especially in today's environment, it's a rotating role. And what I mean by that is that they are hiring, firing, all that very, very quickly, and it's really hard to hire for that role. So we are taking a major step to make it easy to use our platform for that person that's sitting in the front office, because those are the ones that are usually talking to patients about
the office manager.
Exactly, the office manager or the front desk staff is what we call them. There's a big company called Rectangle Health that is in 50,000 offices.
Wow.
That is a very prevalent software that does the payment processing and ties it to their revenue management cycle platform. We are actually been working on integration with them, because today you have to do something in a rectangle screen, and which is usually your backbone, and then you have to go over to our screen to get financing. Going forward, we've just finished our integration with Rectangle. We haven't fully announced it yet, but we're going to merge that into one screen.
Nice.
That when you're training this new front office staff for the 4th time in this year, you have to only work with one screen and just hit finance through HFD, and you're able to get a monthly, payment plan for this patient that's right in front of you. That's 100% approval. So no, never just say no to this patient in front of you. And this way we can have a seamless integration and aggregation of screens, and it makes it easier for every provider to have that conversation. So that's something that's we're testing right now with a few select providers. We should be announcing it and launching it much widely after the next couple months. So that's something we're really excited for, because that will make it just one screen, seamless experience for the providers.
See, that's what I was looking for. That's the inside track. That's exactly what I wanted. I wanted the preview. Listen, that's a fantastic deal, because that puts you in. That's a big deal for you guys. That puts you in so many more offices, just like that. It sounds like a one click, apply kind of thing. So that's a big deal. So congratulations on that. Let's talk about this. So what motivated you to join HFD? I mean, you're the COO, right? So like, what were you doing before? And then how did they get a hold of you?
Yeah, that's actually a good story. So I've spent most of my time in a lot of more operational roles, more consumer facing roles. I worked at Apple, I worked at Levi's that's when I kind of got into the fintech side because we had to do global processing of payments and people paying. And that's where I learned that no matter what industry you work in, payment is the final step of checkout. You've gotten someone interested in jeans and got their fit, got them navigate through your website, but you have to still make sure they can check out. And that's when I got really
A lot of
interested.
abandoned carts. There's a lot of abandoned carts.
Exactly. Or you forget your card number, you don't have the card number on you, and you have to deal with that. You get a decline in your credit card because of some reason or one or another. So that's when I got really interested in payments. Then I worked at a subprime credit card bank, actually. And part of the bank, I realized that how profitable the subprime segment is. Most of us think about prime. You think about your Amex cards, you think about how much you pay on those. And but subprime is actually incredibly profitable because a lot of these players have to charge high fees to offset the risk.
Sure.
So if their data and their risk modeling, the underwriting is really sophisticated, which the bank I was at was really good at it, they can run a pretty good profit on some of these cards we're doing. Now, the reason I found HFD was because the only other industry in the financing world that was consistent, sustainable, recession-proof like that was the healthcare one. Because if you think about healthcare, again, it's not the same thing as buying $200 shoes because that's an impulse buy sometimes. Healthcare, you have to physically go into an office, get the treatment on you. So we have very little fraud. And because it's healthcare, which you really need and want, and you're seeing a doctor who's like, down the street from you, there tends to be much better performance on those contracts. So I actually came across HFG when I was first looking at 10 industries that were still financing that was a sustainable, viable, and profitable one. And that's how I found it. So
Awesome.
I joined as their VP of consumer finance. They were trying to scale at the time. It was the right time, right fit. And then we've been kind of scale up our different strategies, but also to scaling up our how we want to go into the future. And the future, as we find, is really these aggregations of services, aggregation of lending, aggregation of screens. And that's where we're going to double down on how do we tackle the technology aggregation, but also looking at aggregations of providers. So like clusters of like DSOs, for example, they're dental service organizations where they have hundreds and hundreds of offices of mom and pop that consolidated. Those are a really good way to start. And then we're looking at fertility, we're looking at LASIK. Those are all industries where we find that people are really double downing on, and from a consumer perspective, that we can help with the large costs to do those services.
So how are you guys getting, I mean, they've been around for a while, obviously, right? But, I'm a marketing guy. I always ask about marketing. How are you guys, other than doing podcasts, are you doing some PR? What are you guys doing?
This is how we market.
Yeah, this is it, right? But how do you normally get in front of doctors' offices? I mean, they can be a little harder to market to. What are you guys using just as your platforms and so on?
For sure. We have a pretty human touch to how we market. We physically go to a lot of conferences where we can talk to people about understanding how our platform works. We have people literally dialing offices and say like, hey, how are you doing it? And how do you want to do it? So we're really just kind of focused on people with a human touch. And then we actually have a lot of people coming to us now because they know about this 100% approval. And that's a big pain point. No one wants to say no to a patient. And when they hear that there's a 100% approval platform out there, they actually come to us. So we can't take them through what's required to get it up and running, and we can get someone up and running in as little as 2 weeks. The big part is
that's fast onboarding.
The big part is really actually just training that front office staff. So yeah,
that's cool. I want to ask a little bit about just you personally. So I ask this question a lot to my guests. What did you want to be when you grew up, like when you were a kid, right? And then like, is this it? And if not, like, how did it get here from whatever that initial childhood dream was? I'm just curious.
So I've always wanted to be an engineer growing up because my entire family were engineers. I mean, we used to sit around the breakfast table doing like puzzles and stuff like that because we have that engineering mind. So actually at a very early age, when I was 19, I was doing work on fuel cell cars. So if you think about electric cars now, fuel cell cars were actually the true zero emissions, literally just outputs water.
Mm-hmm.
And I was in Austria doing research on fuel cell cars when I was 19 years old. And that's when I kind of realized, and this is before the recession. I'm dating myself, but this is before the 08, 09 recession, where even though electric cars like the Prius have been around for decades, no one was really driving them.
Yeah.
So that's when I had this realization that if I work on fuel cell cars, it may not come to fruition in my lifetime.
Mhm.
But I knew I wanted to work on something that was future proofing the industry, the world, and making it better.
Mhm.
So I got into healthcare after that because I had to move away from fuel cell cars. And my degree at the time was material science and engineering. So it was more adaptable to healthcare and medical devices. So kind of got into healthcare then and kind of meandered through a little bit, working in operations, working on consumer services. But I finally ended a place I think marries my love for this whole personal finance idea with healthcare. So I'm really glad to finally be at a place where I think I can be for a long time.
That's awesome. Is there anything that I didn't ask you that you want to make sure the audience knows about either yourself or the company?
Yeah, I think one of the things that I love to opine about is about the future of the credit score.
Okay.
And here's why. You probably applied to college, you took an SATs, you apply and blah, blah, blah. The credit score that the Americans use in their financial system today is akin to saying your SAT score describes you, which we know it doesn't, right? And college admissions are starting to,
scores.
yeah, it's college admissions are moving away from it. They take a look at you as a person, your essays, your references, everything like that to understand who JC is. But we don't really have that for the entire American financial system right now. It's all based on this credit score. And what I love talking about is what's being done in other countries. So if you look at Africa, for example, there's no credit bureau of them. We have 3 in the US. There's really no credit bureau in Africa.
Yeah. Mm-hmm.
And there's a company out there called Brand, which is a startup. And what they do is that they actually look at your SMS texts and your cell phone data to determine how trustworthy you are as a person.
Wait, I don't think we go for that here in America. Like,
no, it's too privacy ridden, but it's
Sure.
the idea of how do you paint a picture of a person without just a score.
Sure.
And that's what banks do all day. They try to get different sort of data, bankruptcy data, healthcare data, all this stuff to kind of paint the picture of
I have seen a new trend where they are looking at your payment history with other bills, like credit card bills, sure, but like your mortgage, your electricity bill, because not everyone has credit cards or big ones, but they pay their electricity on time, they pay their rent on time. So I've seen that you can connect like different accounts now into that, and it can help boost your credit score based on the trustworthiness of just your actions. That wasn't part of it for the longest time.
That wasn't part of it. And if you ever like had progressive car insurance, they send you a little like tool to put into your car. And then
you can do that with apps now, period. Now, just your phone. You don't even have to put in your car anymore because your phone's gyroscope and GPS is so accurate now that literally you can just download an app and it just runs in the background and it can see how you're driving, which I don't do that because I would not qualify for better insurance. They would probably raise my insurance if they saw how I was driving.
Like,
I'm turning that app off.
Like, I got a good deal, I'm keeping it. No, but
the good news is it's only a one-way benefit. There's no penalty to anyone listening. Those apps cannot penalize you for driving like a madman like me. They can only give you a better rate if you drive like a grandma, essentially, right? So just for clarification.
And it's not even that. I actually talked to the progressive person once. I'm like, what do you look at? And they actually look at how regular your routine is. It's not whether you brake hard or whether you drive, 5 above the speed limit or 15 above the speed. I mean, I'm sure they look at that too, but they actually look at does this person have a stable job? Does this person go to church on weekends? Like little things like that.
Oh, that's interesting.
That's really interesting,
overlaying location data.
Yeah.
Again, like some people don't want to see how the sausage is made, right? Like this gets into privacy areas, but again, I can see I see why they would do that. And I can see where the benefit is for sure. Like I work from home for the most part. So they probably look at me and go, this guy's not driving almost at all. Yeah. So honestly, maybe I should run the app.
Yeah.
I can still drive like a madman.
but it's only once a week, right? So it's
Yeah,
not,
I'm barely driving it on. I thought to myself, why am I paying all this money for full coverage? It's the same as the other guy who's literally out on the road, which is just more risk. The more you're on the road, the more chance you have of getting in an accident. I'm barely on the road. So it's like, should I pay a little bit less? I got to look into this now. Just from this talk, I think I'm gonna have to go look into this again.
Well, I hope that's helpful. But I think the idea is that there's so much to be done about how do we best paint the picture for a person instantaneously without just using a single credit score. And I think that's going to be the next wave in the next 10 years too, which I think is fascinating.
It might be one of the few things that I've seen that is a massive benefit to all consumers that is actually catching as a trend, right? And there's no catch to it really. If you think about it, it's a win-win, right? It's a benefit to the consumers, but it's also a benefit to the risk models of the companies, right? Like they now can understand better where they should be putting their resources or what their risk model should be and whatnot. So, but unfortunately, I think that in that respect, I think consumers only get a win if the businesses are going to get a win, right? So I think the only thing consumers can hope for is a win-win, because it's almost probably never going to happen that it's just a consumer win. You know what I mean? And I think the only exception would be something like Amazon, for example, where one business wins and almost all consumers win. But that, we can spot that one because it's really rare. But I do like that trend of where that's going with credit scores, because it is more fair. I think it also helps eliminate any kind of racial or poverty disparities that you have in calculating it. There's no person at the top going, oh, we want to keep that person down. That's not the point. But the numbers aren't lying, they can be misinterpreted, right? And so you look at someone who maybe is poor and doesn't have a credit card because they don't qualify for one. It doesn't mean that they're not trustworthy. It doesn't mean they don't have a standard income that they would pay every single month. It just means they don't have the credit card, for example, right? And so if you have these alternate ways of deciding if they are trustworthy, then now that person can live a more functional life and be part of more normal society and get a credit card or get a cell phone, a smartphone, which usually they check those things too, for payment plans. I mean, everything, even electricity bills, they run credit on that. It's crazy. So anytime that I think that we can think outside the box and give everyone a fair chance, regardless of their situation, that's awesome. So I think that's such a great feature that you guys have. And I can definitely see how a doctor's office would, or even a hospital would love that, because, there's a lot of leakage there, breakage, right? There's, when they can't take on a patient because of money, you just now solve that issue for everyone involved. Like, how is that bad? Everybody wins. I love that.
Yeah. I mean, we live for these testimonies that we get from the front office staff. It's like, oh my gosh, John came in because we called him. Now we have HFD, and he was so thankful that he was in tears. Like, he can finally get his teeth fixed.
Can people refer, like, if someone was listening, they're like, I want to get elective surgery for something, and the place I want to go doesn't have it. Like, how does like a regular person just refer, like say, hey, have you guys using this? Like, is there any model you have in place for like the person to like bring it to the office?
You know what? Go to our website, send in like a little contact me form, and just be like, here's my doctor's office, here's the phone number, and our salesperson will get on the phone and try to talk to them.
That's cool. I like that. Yeah. All right. So how can people reach the company first, and then how can maybe someone at a company, maybe it's a little high level, if they're in that VP or C level, and they want to talk to you about a big massive integration, how would they get a hold of you personally?
So I'm on LinkedIn, Alice Ferguson, and then Ferguson at healthcarefinancedirect.com. But also just go to our website, myhfd.com or Healthcare Finance Direct, and someone will definitely reply back to you. We're a very people heavy company, and we just love talking to anyone and everyone about how the patient financing can be so much better.
That's awesome. And listen, for everyone listening out there, again, if you liked what you heard today, be sure to subscribe to the podcast, give it that 5-star review, a little bit of notes about it. You can mention Alice in there. So other cool techies like us can find and enjoy about all these helpful B2B softwares that are out on the market today. Alice, thank you so much for being a guest on the show. I love what you guys are doing. That's why I was so adamant about having you on the show today. And I do hope to talk to you again soon.
Thank you so much, JC. Bye-bye.